Australia's private capital expenditure read for the third quarter had a bit of a shocker. Forecast with a fall of 2.9%, the read came in with a slip of 9.2%. But is it all just spirit animals, as my next guest, Dr. Shane Oliver of AMP, suggests? Shane Oliver, welcome back to Dukascopy TV. It's a pleasure to receive you again.
Thank you. Thanks for having me on the program.
No problem at all. Okay, so today we're talking the private capital expenditure figure, or Capex numbers as they're more commonly referred to. And we had soft, to say the least, figures from market consensus expectation of a fall of 2.9% to 9.2%. Now, if we break down these figures, obviously mining investment really sort of led the field with a 10.4% fall in that, similar fall in business investment also. This is kind of reiterating really the investment cycle trends that we were already aware of. With that said, how did market consensus kind of get it so wrong?
Well, I guess the market consensus is often wrong, and they're often particularly wrong when it comes to the Capex numbers, because there's not a lot of guidance out there as to what's going on with Capex. The mining numbers, we all know the story there. They're unwinding after the boom we had a few years ago, but sometimes they unwind rapidly. It depends on which project ends at which point, such that they're down 10% like they were last quarter, and sometimes they just come off a little bit. So there's always uncertainty about that. And then you've got this uncertainty about the other component, which of course is non-mining investment. And it all comes back to animal spirits. So it's basically economists, the market, trying to predict animal spirits. And if there's anything where animal spirits play a much bigger role in the economy, apart from the share market, of course, it's the Capex numbers, the investment numbers.
But with that said, we also saw a more optimistic outlook then for Capex figures moving into 2015 and 2016. Again, can they sort of hold true? Expand on this for us.
Well, it's always a matter of interpretation, these numbers. So two things come out with the Capex numbers. One is estimates as to what business investment did last quarter, and that was 3 times worse than expected. The other component is an intention survey for the current financial year, so for the 2015-16 financial year, and that will include 1 quarter of actual data and then 3 quarters of expectations. And depending on which way you look at it, they're either good or bad. On one measure, you can say, well, those expectations were stronger than they were 3 months ago. They were up 4 or 5% or something like that. The other alternative way of looking at it is to say, well, they usually rise through time anyway. As you get closer to the end of the point, the more current expectations get revised up. But the worrying thing is that they're still down 20% on where they were a year ago. In other words, companies are planning to invest 20% less than they were planning to invest a year ago for the previous financial year. So in that sense, it's still quite weak. And in fact, whichever way you cut these numbers, we're still looking at a fall in business investment in Australia for this financial year, obviously led by mining, down 35%, something like that. No great surprises there. But the big concern, I think, in Australia is that non-mining investment is yet to show clear signs of an upswing. Maybe not as negative as might have been feared last quarter, but still going down. And I think that's the thing lacking in the Australian economy at the moment.
Well, the other thing also to consider is that Aussie dollar levels. Now, we saw the Aussie dollar tumble immediately after these Capex figures. Is that going to be such a disappointment, though, given we're coming off the back of those 1-month highs that we know policymakers aren't going to have been happy about? Sort of where does this end up taking us in terms of that overall sentiment?
Well, the Aussie dollar often bounces around a bit and overreacts to things, just like some share markets did in relation to the Turkish shooting down of that old Russian warplane that supposedly went across their borders. So you often get these market reactions. Markets don't have all the information in front of them and obviously shoot first and ask questions later. But you're right. I mean, the Aussie dollar has come up a little bit lately. A few months back, it fell as low as 69 cents. Overnight, we're pushing up towards 73 cents. And of course, so the fact that it's come back a little bit, still above the previous lows, I don't think is seen as being neither here nor there. It's just normal volatility in the currency market. The bigger issue, of course, is what happens to the Reserve Bank going forward, what they do on interest rates.
Well, and that's it. A lot of the headlines coming off the back of these numbers and Aussie dollar movements and iron ore at 10-year lows is, the RBA plot thickens, as it were. Obviously, we're going into the meeting next week. Where do you think the headspace of Glenn Stevens, or spirit animal even, is currently at?
Well, the other day he told us to chill out, that he thought that there may be a case to cut interest rates again, but still not sure that's the best thing to do, and said, well, we've got the Christmas period, let's review it again in a few months' time. So I got the impression from that that his inclination was to do nothing at next week's meeting, that he wants to chill out. I guess the board will be full of Christmas festivities, perhaps. So my expectation is they'll leave rates on hold, but these Capex numbers were certainly on the soft side. They're telling us we've still got no sign of any pickup in non-mining investments. No great surprises in mining, but non-mining is the disappointment here. But I think they'll look at it again in February, much like they did last year. Did nothing through all of last year, in fact, and then started cutting again in February. So I think you'd have to say on the back of these Capex numbers, they cause excitement because we only get them every 3 months, not monthly. But I'd say there's a good chance that we'll see a cut in February or March next year.
Shane Oliver, many thanks for the update.
My pleasure. Thank you.
Our many thanks, as always, to Dr. Shane Oliver for his update. That is all we've got time for right now. However, for more looks at what the Aussie dollar is doing, do stay tuned to Dukascopy TV. For now, though, it's goodbye from me.